Good morning and welcome to What Matters with me, Anna. Today we are covering the tax watch, what Malaysians need to know. In the studios with us, we have Mohameed Faisal, Secretary General of Malaysian Association of Tax Consultants, MATA, and the founder and managing director of Faisal Tax Consultants, Sendirian Berhad. Now, he is also a chartered accountant, a tax consultant, and has more than 30 years of experience in accounting and taxation. Now, as one of the key leaders in MATA's technical division, Faisal continues to contribute actively to the development of Malaysia's taxation and accounting industry. Faisal, welcome to the studios.
Thank you very much, Anna. Thank you, Herman and TRAXXfm. It's my pleasure to be here.
Yes, pleasure to have you as well. Now, for the next 30 minutes, we'll unpack practical tips on navigating taxes in Malaysia, the recent changes that matter to you, and how to plan smarter. Now, we are also live on Facebook, YouTube, and TikTok at TRAXXfm Official. So if you have any questions for Mr. Faisal, you can put it over there. Now, let's get into the business. Can you give us a brief overview of the most important recent changes in Malaysian tax law that ordinary taxpayers should know?
Okay. First of all, first thing we need to know the tax to GDP ratio. Okay? Because if you look at in the past years, beginning from 2024 up to right now 2026, there's evolving changes in the tax landscape. Okay, so we can see a lot of new tax measures have been introduced, regardless of this corporate tax, income tax, or service tax, tax, etc. Okay? So that's why we need to look at the tax to GDP ratio, and where the government now they are looking at this actually basically broadening the tax base. If you look at the 2026 budget announcement, okay, the expected tax revenue is around 270 billion ringgit.
Wow, okay.
That actually comes from the corporate tax, income tax, and also indirect taxes. So from this 270 billion, what the government's actually saying is that, look, my tax to GDP ratio is about 12.6% only, compared to our peers outside of Malaysia, even Asia Pacific region. Ideally, OECD said you should collect 30%. Little bit of the GDP. GDP. What does GDP to the man on the street to try to understand what GDP is? Tax to GDP ratio is that for every ringgit, the economy produce how much go to the government in form of tax.
Okay.
So that's why it's called tax to GDP ratio. Okay, 12.6%. And the notion is that because the rate is low, we are basically trapped into the middle income countries. We are not going to the developed country, and also the government couldn't do more for the rakyat. So that's why in the past year we are looking, the tax base have been broadened. Particularly, we can see very well known is the e-invoicing, okay, and then also the new service tax, the major six industry. Basically, I say caught into the so basically to collect the service tax and pay to the government, as well as capital gain tax. And last year was introduced as a stamp duty, where they go into the digitalization of the self-assessment system. So this is overall what you can see is that we can see more and more to come also lah. So basically it's broadening the tax base is already in the eyes of the government.
I see. Now, of course, for salaried employees, what are the top 3 tax deductions or reliefs people commonly miss?
Okay, I will not really particularly pick up what are the 3 lah, but there are maybe there are because nowadays the tax filings have been made easier by the IRB. What you need to do is that you log in and then you download your form. All your information regard to your claims all are basically presented in the form. You need to select and then claim it. And if you don't understand, they explain. There's a note to explain that. So I think by and large, I think most taxpayer, individual salaried employees, they actually follow through, particularly the middle income group and above. Because the lower than middle income group, or basically we call B40, by and large, they don't really submit any tax. They're tax-free.
Yes.
And what I can see is that mostly in my experience, I've seen is the SSPN. Scheme Simpanan Pendidikan Nasional. Okay, PRS is another one. PRS another one. And also upskilling, personal development expenses. Okay, these are basically, to me, it's an investment. People tend to buy and then they claim. They get a receipt, they go
Yeah.
for the receipt, and they claim a deduction. But these are three important investment that we can say the relief is given on the investment rather than what you spend. So SSPN,
Interesting. Okay.
SSPN maximum you can claim is 8,000 in a year, and PRS is 3,000 in a year also, and also upskilling you can claim up to 2,000 ringgit per year.
Wow. Okay. So upskilling would be like you go for any for training, seminars,
yeah.
workshops, and then yeah.
Yeah, these are all a personal development. So it's a good investment
Yeah.
that actually beside you investing, the government is still giving you a relief.
Okay, okay. So these are some of the things they can use and claim under SSPN, PRS. What is PRS again?
Yeah, the private retirement scheme.
Private
You have
retirement
an EPF deduction on
Uh-huh.
one side, which is mandatory by the employer and also the employee.
Yes.
Okay, the other one is PRS, is normally is voluntary.
Voluntary. Okay. I can't relate to it, so that's why I have to ask. Maybe those of you who are listening might not know, but now you know PRS. Now, how should gig workers, freelancers, and online sellers register and manage taxes differently from traditional employees?
Okay, this is very interesting because as we all know, they are all always on the IRB's radar. Okay, traditional employees is normal.
Is-
We know
yeah,
we get a
pretty
year
straightforward,
form.
yeah.
The year form, government gives servant receive EC form, and then they file the tax return accordingly. Gig worker is slightly different.
Yeah.
Unless they work for a company that actually engage in the gig business or e-commerce activity. For the individual who is actually engaging in the gig economy, they are considered from the tax viewpoint is engaging in the trade. Meaning, their income is basically called business income. Business income, so their filing is actually Form B. Okay, Form B, and the scope of deduction is always is really wider compared to
Okay,
the employee.
okay.
They can claim a lot of expenses, so they need to look into number one is not only the cash income, non-cash income also may be subject to tax. And also look for the wider tax deduction that they can sort for it. I can relate one example. Sometime I think quite years ago I've seen one TikTok. It's very famous. There's one influencer actually walked to the street, saw a family. I think not a family or in the street actually. The one man sitting and he given a gift as a motorcycle. Give a motorcycle.
Okay.
Yeah. That motorcycles, that gift given to the individual, okay, possibly can claim a tax deduction. Why? Because it's using that motorcycle to generate income, business income. So
Okay.
you look into all these aspects and collect and track your income, your expense, and also register as a business income and file the tax return accordingly.
Yeah. Wow. Okay. Wow. I think you explained very wonderfully there. Thank you so much for that.
And
Now-
don't forget also under the SSM also they might have to register. Also.
Yes,
Many actually miss out that.
Yeah, please do, because I know people close to me who go into business. They want to be like a freelance, or they want to have a business on their own, and then they kind of neglect SSM, which is very important. Yeah, so go and get yourself
Precisely, yeah.
registered under SSM if you're a business owner and you're starting up as your self entrepreneur or something like that, right? We are speaking to Mohameed Faisal Syed Ibrahim, the Secretary General of the Malaysian Association of Tax Accountants, MATA, and we are speaking about Tax Watch, what Malaysians need to know. We will go for a quick break, and when we come back, we'll speak more to him right here on Trax Midday Buzz. Welcome back to Tracks Meet the Bus with me, Anna. And yeah, right now we are having an interview feature. We are talking about Tax Watch, what Malaysians need to know, with my guest, Mohameed Faisal Syed Ibrahim. He's a Secretary General of the Malaysian Association of Tax Accountants, MATA. Now, we are also live on Facebook, YouTube, and TikTok at TRAXXfm Official. So if you have any questions, you can put it down over there. Now, sir, let's get back to our interview. What are the key steps a small business owner must take to ensure proper GST or SST and corporate tax compliance?
Okay, all right. First, we don't have GST. It was already abolished in 2018.
Yep,
So it's replaced with SST.
SST, yep.
Okay. For the corporate, a small business owner, business owner can be in two forms. One is actually the entrepreneur, which is like similar to the gig economy, which I mentioned, explained, is that need to file the Form B. Corporate, we call corporate client, but okay, corporate entities. Corporate entities, they need to file a tax return called, it's basically corporate tax return, the Form C. The number one, what they need to do is that, of course, they need to register a tax file.
Yes.
And usually, once they have incorporated any entity, a new entity, once they have incorporated incorporated entity with SSM, automatically the lembaga hasil will issue a number, TIN number. The TIN number is actually entitled them to file a tax return, and also corporate tax entities or even business owners also must remember under the income tax law, they are also as an employer obliged to do compliance also. They need to comply, which is actually reporting all the employees' income in a year via Form E and also prepare the Form EA. So these are two key things. Another one is also they need to look into the tax estimate. The tax estimate, they need to prepare the tax estimate. They need to file a tax estimate and also do a revision if it need be. And usually the tax estimate is 30 days before the beginning of basis period.
Okay.
They need to tax estimate, meaning they estimate upfront. I pay the tax upfront. When I file my return, how much my tax that I need to pay, I offset against whatever I paid, the balance, I either overpaid or underpaid. Overpaid, I entitled to refund.
Yeah.
Overpaid, I go to top up.
Top up, yeah,
Okay?
correct.
So this is what they need to do. SST is very important also because it's also, like I said, it's already broadened. The tax
Yes.
is broadened. Need to look at the threshold. Okay, threshold is actually varies from sector to sector. For instance, like management fee or normal businesses, usually the threshold is 500,000 and above. Okay? Food and beverage is like 1.5 or 2 million, and the other one is also rental, leasing, healthcare. So all this look at the threshold. Okay. Particularly when they say that when you are for example, when about to reach a threshold of 500,000, keep track your monthly sales, and if you see like around 450k or if you're going to reach a 500,000, immediately register for SST. And that SST basically saying that registering the SST, the custom basically I become the agent of the custom to collect from my client or customers, collect the SST and pay. So time then followed by timely filing to avoid penalties. So this is the basic thing they need to do to ensure proper compliance.
Now, how can Malaysians verify whether a tax advisor, this is very important, a tax advisor or consultant is qualified and trustworthy?
Okay, before I explain to you how to go about it, number one is that very important to engage a proper a qualified tax consultant. Who is the person who qualified tax consultant is actually written in the income tax law.
Okay.
Income tax law under section 153 subsection 3, it actually basically given the role to MOF to appoint qualified tax consultant, or we call tax agent. And this tax agent, MOF has set up a rules. Okay, who are they? Should be normally a chartered accountant or those who have experience, 5 years experience in the tax field. And also they need to have the enough CPDs and also the number of clients, etc. So they give the license to them. Okay, having a proper tax consultant is very important because there are numerous case law dispute between the companies, the corporate, and also the IRB, which are brought up to the court. Okay, in Malaysia, the appeals go in the way that, let's say you have the you have the disagreement with the IRB, and you need to escalate your appeal. You
Yeah.
can always go further to special comm, and then go up to High Court, and then to the Court of Appeal. That's the last stage. So in many cases, the judge has actually specifically said in those cases that in the case where the taxpayer appoint a proper tax consultant, chances for penalty remission is there. Chances for dispute to be success is there, because they said this particular corporate entity has already appointed a proper tax agent. There's a proper advice and so on. Okay?
Yeah.
Unqualified, or they call bogus tax agent. The bogus tax agent, the issue with the bogus tax agent, number one, actually they are not acting according to the law. Okay, they're not operating. Usually when it comes to tax audit, the lembaga hasil officer, if you're not a qualified tax agent, say please step out from the room.
Yeah.
I want to speak only to the company. So the company may lose that opportunity to be represented.
Yeah.
The second one is that, okay, the second one is that normally the bogus tax agent, when come IRB knock the door, they are the one first run away. I've done my work, run
Okay.
away.
Interesting.
Okay, but with various excuses. Okay? So to know who is the person, whether or the person is really a qualified tax agent, the IRB has a list of tax agents. You can actually go through into their list in Lembaga Hasil website. Even if I'm not mistaken, MOF, the Treasury also under the treasury.go.my website also is available. The list of the tax agent, we can actually do that. So please get the tax agent so that
Yes.
it's properly represented.
Yes, exactly. Now, let's move on to the next question. What practical tax planning strategies can middle-income households use now to reduce tax liability legally?
Okay, middle income group is always we used to hear that middle income trap. Okay, come to tax also, they are not really normally it's advantageous, because they are generally the tax rate is that closer to the T20, okay, the higher income tax bracket, and they can't go to lower because their income is.
So these are the M40s, right?
M40 generally they are M40s. There are some T20s also, but it's maybe those were in early stage.
Okay.
The problem is that they have to pay more tax based on the scale rate, because Malaysian tax, individual tax, they go on the scale rate. So when they are in the higher tax bracket, what will happen is that they need to pay tax, but at the same time their cost of living is high. So they need to manage that. Yeah? So not much. Normally employees they don't have much room to maneuver in terms of reducing the tax liability. But basically what they can do is that, particularly we break into three categories of individuals. One, individuals. One is married with no child, and the third one, married with children. For the individual, like I said, in order to reduce the liability, then go for whichever they can be claimed, particularly the one you can invest.
Yeah.
Invest and you claim. Married couple, they can organize. Okay? They go for the separate assessment.
Okay.
Malaysia exercise combined assessment, separate assessment. Combined assessment means you join both husband and wife income together and report in one account, normally under the husband's account. Okay. Separate assessment, husband and wife file separately.
Yeah.
Okay. The scope of deduction is actually more. Higher.
Okay.
So organize the deduction. Because some deduction that you want to claim from the IRB, you need to have the name printed. The claimant must have the name printed and also paid. Paid and then printed in order to claim. So example, childcare fees, for example. Okay, fine. Maybe get the wife to pay, not everything to husband. Okay? Usually in my experience, we tend to see that husband take up everything, all the deduction, and left the wife to pay more tax.
Yeah.
So in the end, we have to look at the total household liability, tax liability, how to reduce it. So organize it accordingly, and look at the impact. Okay, simple way to do it is that do with or without. Okay, with means what if I do a combined assessment, how much tax liability I have to pay. Separate, how much I pay. What happen if the husband claim entirely or wife claim entirely? Then do a comparison and do the filing accordingly.
Now, what about for those who are, as you mentioned, married who has children?
Married with children also similarly. Married with children is also the similar concept. Like I say, the child care fees can be exercised, and also the claim for child relief, children relief. Child relief, Also, you can actually split it. Split it. Maybe you got 4. Right? For me, I got 6. So, 6. So
Okay.
sometimes split to 3, 3.
3 3. I see, I see.
So in order
Okay.
to reduce the tax liability.
I see. So that's how it's done. Now, many people worry about adults. What triggers audits? Sorry, what worry about adults? Sorry, I can't. I read it wrongly. Many people worry about audits, right? What triggers audit most often, and how should taxpayers prepare if contacted by LHDN?
Okay. First and foremost, I would like to express this thing because this is very common. Everybody worried about a tax audit.
Yes,
Okay.
definitely.
Why there's a tax audit is very important. Okay, we have 2 elements of IRB coming in inspect. One is tax audit or tax investigation. Tax
Okay.
investigation actually is something very serious. Tax audit is an inspection document because in the first place, Malaysia exercise self-assessment system. Under the self-assessment, we file the tax return based on the known tax liability. We do file the tax return. But IRB need to come and inspect whether all this been done properly or not, and to ensure that proper tax have been collected from the taxpayer. Okay. First and foremost, do not afraid of the tax audit, or do not let IRB to dictate how you do the business.
Yeah.
Okay, because it's your business.
Yes.
If you think that that particular income should not be subject to tax with proper advice and guidance, go for it. If you, or even if you know that certain deduction need to be taken, also go for it. And make sure all these are taken into account. Okay, because you know that it's deductible. Of course, the tax law also operate in one way, is that already specify what you can claim, what you cannot claim,
Yeah.
or in some instances it's an anti-avoidance provision. So all this is within the framework of tax law. So as long as you follow the law and also the practices of the IRB, there should not be any significant problem. Okay, so what triggers the tax audit? Number one, you must also look at the trend of your filing. Okay? If there's an inconsistency, you must know that inconsistency is coming from where. It's genuine business reason is okay. Okay, but make sure it is for genuine business, not for something else. Okay, or sometimes IRB go on a specific industry basis, and also sometimes we look at the pattern.
Yeah.
Pattern of claims, why you're claiming more, these things. That's why I have to go back to earlier one. Number one, you do not worry about tax audit. Tax audit, let them come and then do the proper explanation with the documentation. Very important to keep the documentation. Okay, when they come and perform the audit, IRB will issue their tax audit finding. Okay? You say you agree or not agree. Then there is a contention. If any contentious issue, explain and get the IRB agreement. Does not agree, then you can always escalate to the next appeal, which is called a special com, or there's another one called dispute resolution panel, and so on to high court and court of appeal and level. So this is basically the overall function. To keep track. Ultimately, let me explain to ultimately is that record keeping, because in my practice when I perform, engage helping assisting the client in the tax audit, it's much more easier if you have a proper justification and also the documentation to support all this.
Okay, understand. Well, there's a lot of things you shared over there. I feel like even my brain is like overloaded with information. But let's go in for a quick break. I am speaking to Mohameed Faisal Syed Ibrahim, the Secretary General of the Malaysian Association of Tax Accountants, MATA, and we are talking about Tax Watch, what Malaysians need to know. Don't go anywhere. We will be right back. Good morning and welcome to What Matters right here with me, Anna. And today we are talking about Tax Watch, what Malaysians need to know, with my guest in the studio, Mohameed Faisal Syed Ibrahim. He is the Secretary General of the Malaysian Association of Tax Accountants, MATA. Now, sir, with cross-border digital services and e-commerce growing, what should consumers and businesses be aware of regarding international tax issues?
All right, I can basically vouch you also because now I think we don't longer doing business domestically. We also engage with the parties outside Malaysia, whether it's consumer or whether it's a B2B B2B or business to business or business to consumer, etc. So if for the commerce, for the individual, the area they need to look at it is basically it's a low value imported low value goods, which is subject to 10% for the purchase below 500. I think that one is not much becomes a hoo-ha.
Yeah.
Okay. That's the good thing about indirect tax compared to the direct tax. Because indirect tax people spend and they spend together with the additional, let's say, a smaller percentage of tax.
Yeah.
People don't feel it compared to I earn so much money, I could pay a lump sum of in tax from my income. Okay? So that's low value goods, imported low value good. For the corporate, you need to get withholding tax. Withholding tax, where it is actually literally speaking that the corporate becomes the agent for the IRB to collect tax for the foreign service provider. Okay, any services provided by Malaysia, every service provider, foreign service provider in Malaysia. Basically, it's going to perform in Malaysia will be subject to withholding tax. Okay, so there's a special section to need to look at that, and the other one is also look at the tax treaty. Tax treaty may help because sometimes you have to pay tax in both countries.
Yes.
So how do you manage that? So in Malaysia we do have a double tax treaty or unilaterally tax relief also. So that's one area we can look at it. And the other one is also, but rather in the end, we said there must be, beside the domestic discipline, we must look at all these areas. Service tax, one more thing, service tax. Service tax also, please look at the imported service tax. Because in one way, I can say that foreign service provider, when they provide a service, not only will be subject to withholding tax under corporate tax, but under the service tax, imported service will be subject to tax. So it's actually double taxation.
Yeah.
And for withholding tax, for example, if you don't claim if you don't really pay the tax, basically collect the tax on behalf of IRB, the cost that you paid to the foreign service provider, you cannot claim a tax deduction.
Yeah, okay.
On top of that, you'll be liable to a penalty.
Yeah, so that's a risk over there.
Yeah,
Now,
precisely.
yeah, what support services, incentives, or reliefs are currently available for startups and SMEs that our listeners might not know about?
Okay, we basically we have many tax incentives, quite wide. We have navigated properly, choose according to the business model, choose whichever is appropriate, narrow it down, maybe 2 or 3. But ideally, the area they can look at the preferential tax treatment. Okay, because if you're for a company, if the paid up capital less than 2.5 million, gross income less than 50 million, you get preferential tax rate from 15 to 24% tax compared to other corporate flat 24%. Another thing, so they can look into other incentive provided by MDEC, capital allowance, investment, promotion of investment allowance, manufacturing particularly can look into reinvestment allowance. So the multiple tax incentives are there.
Yeah.
It is just that navigate it. It can be provided, usually it will be under the Income Tax Act or Promotion of Investment Act. And also like other incentive like grants or relevant agency, they would have it. Startup, they can look into angel investors.
Okay.
That's an angel investor, and also the preferential tax treatment.
I see. Now, we are almost out of time, so we have one more question to go. Looking ahead, what tax policy changes do you expect in the next 2 to 3 years, and how should Malaysians prepare?
Okay, if you look at it, in the beginning, I did mention that the tax to GDP ratio 12.6%, okay, or we can call it less than 13%. We actually Malaysian tax practices And the government practicing tax also basically try to align with the international practice also. So there's numerous or several measures they said the government need in order to improve their tax collection. So one area is that I think at this point of time we look what we can see or I can see is that the digitalization, improving the digitalization. How so is that because they're rolling out the e-invoicing, which actually can use as a red flag to identify the what we call it shadow economy, or underdeclared individuals or unexplained wealth that we have seen recently in the news report. So e-invoicing. And also they move into stamp duty is a self-assessment system. And also I think individual, corporate, all those have gone into that position. So strengthening the digitalization, digitalization actually strengthen the tax administration in many countries. Even I have studied one, you will be surprised, in Rwanda.
Wow, okay.
I'm not going to compare Malaysia and Rwanda, far off. Okay? In Rwanda, when they're strengthening the tax administration, their collection of tax revenue gone up more than 50%.
Wow, okay.
Okay, there's a report in the Prime Minister OECD or World Bank, I can't recall which one, but there's it is there. So this is what I can see. Many even said GST might come back. Ideally, I think it should. But I think the government position is that they want to look at they want to elevate basically the cost of living. Sorry, not the cost of living, the income income level of the rakyat to reach at 4,000 ringgit and above. Then they said okay, then they'll be ready to pay GST. So we'll have to see that. So it might come more tax measures. As long as it's needed. But I think on the other side, the government also looking at the need for the rakyat. Main things, what they need is that the elevate or minimizing or trying to addressing the cost of living of rakyat.
Wow. Now, today on What Matters, we are speaking to Mohameed Faisal Syed Ibrahim, the Secretary General of Malaysians Association of Tax Accountants, on the topic Tax Watch, what Malaysians need to know. Now, thank you so much, Mr. Faisal, because you shared so many practical insights. I believe everyone listening right now would have taken something out of it. Now, before we let you go, is there anything else you would like to add?
I think that's all. I think covered fair bit. Quite a fair bit, but also remember next coming in the next few months we have the tax filing month. Okay, maybe I should pick for IRB now. Okay?
Start preparing early.
Yes, correct. Start preparing early. Get a EA form. Prepare, organize your receipt. Okay, compile, and then follow up with the submission. That for individual and corporate also. It's time to complete their account timely because now time run fast. It's very difficult to get the extension of time from the IRB. So they have already given enough extension. So you really need to work for it and complete it so that to eliminate another cost, unnecessary cost, we call it a penalty.
Yes, there you heard it right. Thank you so much, Mr. Faisal, for being here and sharing your insights with us and being a consultant to us here on TRAXXfm as well.
You're welcome.
Yes. Now, if you missed out any points, visit TRAXXfm's Facebook and YouTube page to watch the replay. We got the news coming up in about 9 minutes, and then I'll be back for the third hour of Trax Midday Buzz.